Welcome to the program. Today we'll talk about Trump and what it means for the markets. We'll have a look at Wally Parsons and we'll talk through the myriad of hybrid issues on offer at the moment. I'm Peter Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Pete, big news for the markets at the moment. Trump's making his speech at 12:45 Australian time today, I believe. Do you think the markets are going to react positively or negatively?
The markets really want to see Donald Trump's sausage. Now, don't take me out of context. I've used this in the media, and a lot of people have behaved badly and thought the wrong way.
I'm sure a lot of other people don't want to see that.
Yeah, but he's been selling his sizzle like great entrepreneurs do for a long time. Now he has to deliver the sausage in this speech. Now, he can't deliver all of it, but if he continues to sizzle line, Paul, I think he could be grilled by the Wall Street.
Well, you probably got metaphor mad there, Peter, but is that the right word?
I'm mad about metaphors.
Mad about metaphors. Look, I'm going to say that I think the market could be just a touch disappointed because he's speaking to the nation. It's been televised on primetime TV. Look, it'll be all the great statements about things he's going to do, but the market wants a bit of detail. Whether they'll pass him up this time and say the detail's going to come, I don't know. But
we haven't had that pullback yet. We've had 12 good, strong days.
It's pretty hard speaking to Congress when you're going prime time to give a lot of detail. So let's just see what he says. But my $2 worth is that the market will just be a touch disappointed. But at the moment, they're not going to sell off. So we could just go into this sort of lull again tomorrow, waiting for more information, more detail.
Now, Peter, I know you're keen to talk about the economic growth numbers. Talk us through what
we
you're seeing.
We get them later on today. But the bottom line is all the preemptive data we're seeing is looking good. Profits are looking good.
Good reporting season.
Yeah, good reporting season. But also, I had Chris Richardson from Deloitte Access Economics, and Chris is a very good economist. He was saying we're all worried about an income recession a couple of years ago, well, not long ago. He said the income recession's over. He says there's a surge of national income coming from exports. And by the way, UBS is predicting a current account surplus. You've never seen one of those. The last one was the mid-70s.
Yeah, well, he might just qualify.
No,
I don't
he was 1979.
Yeah, post-70s, end of the 70s.
A current account surplus. They're unheard of, right?
Yeah, it is. And it means that things are turning around, Marty, and that's an important and significant. And Chris says second half of 2017, expect some really good growth.
It's one of the key reasons why the Aussie dollar's not going down, despite all the people saying the Aussie dollar should be lower. When you've got a current account getting to a surplus, that means there are natural buyers for Australian dollars all the time.
Now, we must stay with you, Paul. Let's move on. Wally Parsons, another governance issue, I should say.
A huge governance issue.
This is an ongoing saga, isn't it?
An ongoing saga. The board for Wally Parsons got this indicative offer, highly conditional offer back in November for this takeover offer from this group out of the United Arab Emirates. Didn't tell the market. Was priced at $11.80. Wally Parsons has had a pretty checkered trading history since. It's gone up. It came down after its profit result. It was trading down about $8 or $9, and it's got surged yesterday.
How can boards make these mistakes, Paul? The amount of money they spend on lawyers and company secretaries and legal people, surely it's always about informing the market. How do they do an own goal here?
It's incredible to think they didn't need to disclose this and let the market judge whether just how conditional it was, but. Look, I mean, a lot of shareholders, particularly who sold after the Wally Parsons profit report,
broker who did that.
And the stock dropped about 20%. There's going to be a class action here, right? Yeah. I mean, the board they're going to cost the company a lot of money. Who knows what the long-term outlook for this company is? But it was a cardinal sin not to disclose.
You can read more about Wally Parsons tomorrow in Paul's article on this website. So moving along, hybrid issues. They're in full swing now. We've had Comsec Commonwealth Bank, I should say, do another offering, the Pearls 9. There's a Challenger hybrid out at the moment. Are these good opportunities for investors?
Yeah. Look, I'm not a great fan of hybrids for my own personal investments, but I see the reasons why people like them because they pay a good interest rate compared to term deposits. They're not as safe as term deposits, but I think a lot of retirees like the idea of it. But Paul is my hybrid expert.
Yeah, I think they're reasonably priced at the moment. I think the best way to look at hybrids, Marty, is against, for example, the CBA Pearls 9. The return you get on that versus the ordinary share. Now, dividends of ordinary shares have come down because bank prices have rallied. So we've got the Commonwealth Bank trading at $83. We've got all the major banks now over $30. So the effective yield has come down on the ordinary shares. So Commonwealth Bank hybrid issue at a margin of bank bill plus 3.9. I think it looks pretty good value.
So what is the bank bill rate now, Paul?
Well, it's going to float over. You can look at it over the long term, but you know the bank bill rate's about 2%, so it's an effective yield of 5.9. But that's the right way to look at it against the ordinary share yield.
Basically, investors should realise with hybrids is obviously it's a combination of debt and equity, and obviously you're basically backing the institution to pay you your money back.
Yeah, I mean, I think it's part of my sort of risky fixed interest portfolio, right? That's the way I look at hybrids.
What percentage of that would you make up of?
Look, I probably have about 25% in that sort of component.
Of your fixed interest?
Yep, fixed interest, and I look at hybrids simply as a retail investor, very hard to get at the stuff directly, and I look at hybrids as a fair component. Don't put it all in one issue, but Commonwealth Bank is interesting. Challenges about 4.4, maybe quite enough, but again, a bit of diversification strategy there. So I think it's probably worth putting some money into those markets.
That's all we've got time for. I'm Marty Switzer. Don't forget though, the Switzer Dividend Growth Fund is now trading on the ASX under the ticker code SWTZ. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're
mad about money.